Ladies and gentlemen, good evening. I welcome you all to the H2 and FY24 post-earnings conference call of NewJaisa Technology Limited. Today on the call from the management, we have with us Mr. Vishesh Handa, co-founder and CEO, and Mr. Ashish Nirmal, CFO. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainty. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business performance highlights for the year that went by, growth plans and visions for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Thanks, Vinay. Good afternoon, everyone. First of all, thank you so much for joining in. I know it has been a very busy and like a tipsy-turvy day, everyone who monitors the market. So thanks so much for finding time and joining us today. For those who don't know me, just a quick introduction. I'm Vishesh. I'm one of the co-founders for NewJaisa Technologies. So we'll get started. So just to, for the uninitiated, let me just take 2 minutes to explain about our business model, what we do. So we are largely into electronics refurbishing. We are a full stack technology driven electronics refurbishing company who directly caters to the end customers, right? So we operate in personal computer category. We take these assets from the corporates. We do an end-to-end refurbishing of these assets, and then we supply it to the end-use customers. These could be your SMEs, your corporates, and largely our customers are the retail customer base who deal with these, to whom we sell it through various channels, including like marketplaces. We have our own pretty strong touchwood now, our own online presence now, and we have also started building direct sales channels with school, colleges, etc. We are a 4-year-old like company, and as you can see from our financials, like growing pretty rapidly, given that unmet demand of personal computing devices, which is required in India, almost at a 50% on a year-on-year basis. So before we open, I would like to call out on the few highlights for the last, the concluded financial year. So on a year-on-year basis, we saw a top line grow by almost 40%. We ended FY23-24 at 61.52 CR on the top line basis. Another key highlight that I want to call out from the financial side is that our COGS improved by 3.2%. This is largely driven from our efforts to continue to improve our repairing capabilities. And we strongly believe that these kind of capabilities that we are investing in will help the company to further improve on the profitability and also to cater to a larger segment of customers. In absolute terms, if you do, like, I'm pretty sure so many of you would have seen that, right? So in absolute terms, our profit, yes, on a year-on-year basis remained flat, largely because of the two planned investments which we continue to do. One, as you can see in our like our financial statement, one is on the employee cost. Our employee cost increased on a year-on-year basis, right? And so the overall contribution of the employee cost increased from 11% to 17% now. This is in line with what we have planned as we increase our capacity, and I will just touch upon that point, right? And another 1% of profitability impact which we saw is because of our continued investments on the marketing front as we want to build our brand. Couple of other points that I want to call out for the group is so yes, I mean, now talking a bit about our so as all of you are aware, our IPO closed in October. So as aligned with our objective of funds, right? So we have almost completed with all like a 10 CR of investment on the capital asset side. So the investment largely has gone in both fixed assets and building our IT assets as such. As some of you would be aware, we have built a 45,000 SFT of new facility, and most of the fixed asset or the objective of the fund was also to make an investment towards that. So approximately 10 CR of investment has gone there. Using the funds through the IPO, we have already retired most of our short-term debt. Around 12 CR of debt has been retired, though we continue to have those OD lines with the bank, which we can leverage as we continue to grow. And the third key area where we have invested our capital along with the profits that we have developed, that we have built in the last year, is in the working capital. So as you can see, our inventory holding has increased as we continue to grow at a reasonably rapid clip as such. Now talking a bit about like the business and a couple of the key areas in the business and what has been the key highlights for us. Starting from the sales front, there are definitely a couple of things that I want to call out to the groups and which our investors would be happy to know. First and foremost, as has been our growth plan, and one of the focus area is to continue to diversify our sales channel. Uh, I'm delighted to note that now 25% of sales are coming through our direct channels. This includes our own website, and also we have already initiated, like direct outreach to school and colleges. We have closed 3 MOUs with them. We have already supplied to 4 of the schools, and we feel this channel has huge potential. There's a lot of unmet need in this particular segment. We have also done one franchisee deal. This is again related with one of the large universities, and we are seeing very positive outcome from there and a lot of like interest coming from this particular school and college segment as such. On the sales front, there's a couple of another aspects to share. We got listed on ONDC platform. We are the first electronics refurbishing company to get listed and impaneled on ONDC. The volumes do remain low on this platform, but as the platform continues to grow, we are hopeful that we will be able to reach to a large customer segment through this open platform as such. Also, another significant on the sales side development that is happening, or rather 2 of them. First is we are in a very advanced stage of discussion with among the top 2 largest marketplaces. One of them we are already kind of a market leader, and with the other we are in a very advanced stage. A pilot run has been already done. We are very hopeful to go live, and that should help us to serve even more, retail customers across India. And this channel happens to be, like the number 1 when it comes to tier 2 and tier 3 cities. So I think, I mean, that we are very like hopeful that just single deal should help us, in terms of driving another 25 to 30% of our top line sales as such. Just couple of points or like the key highlights I want to take on the operations front before I open the floor for the questions. So on the operations front, I mean, key highlights as I highlighted, we have now fully shifted and fully operational in our new facility. It's a 45,000 SFT of space in Bangalore. It's now fully operational. Our employee headcount, we have been able to increase from 250 plus on the last financial year to now we are at 450 plus. As I mentioned, post our IPO, which was in October, right? Our key focus has been on capacity building and expansion. That includes your infrastructure, your human capital, and your IT assets, right? And personally, I think I'm like pretty happy with the way last 5 to 6 months we have been continuously investing on that, and where we have reached so far, right? So now we are fully functional in this. We have 450 plus employees. Our daily capacity to process personal computers have reached to a tune of 300 to 350 assets on a single day basis, right? Another good thing with respect to our capital investment is that our current facility, if we scale it to a 24/7 basis, we still have a room for growth of at least like 60 to 70% using the same capital asset. So yes, it has been a significant investment from our end, but that has been done as per the plan to make us ready for the growth for the coming years as such. As I said, we have closed on so our current headquarters, as I mentioned, is currently stands between 475 to 500 SFT. We have also launched our new ERP. It has been like 50% or phase 1 and phase 2 has been successfully launched. Phase 3 and phase 4 we are expecting to launch in the next couple of months. In terms of what business capabilities it gives us, it is bringing a lot more automation to our processes, and it is bringing a lot more traceability and accountability when it comes to AR, AP, and inventory management as such. So those are some of the key features which we are upgrading our current software for, and it will help us to scale. We are also in advanced stage of discussions with some of the OEMs in terms of certain partnerships that will uh, like create a win-win situation for both of us, including the OEMs. Another key aspect in terms of operation, as I was highlighting, and as you can see, the positive impact on the COGS. That's largely because of our there's a matrix which we track, which is called a repair to replace ratio, right? So if we buy an asset, what percentage of the components or parts of it we are able to repair in-house versus replace them, right? And in general, we focus on Class A components, right, which significantly contributes to the bottom line. So again, this year we continued to invest in our R&D. We collaborated with some of the best universities in terms of how to improve our repairability. And on a year-on-year basis, we have been able to improve it between 18 to 20% now. And that's what you can see is helping us in terms of improving our like overall COGS cost as we depend less and less on buying the spare parts and improve in-house capability to repair things as such, right? So these were a few of the highlights. Just to give a like taking another 2 minutes in terms of like road ahead or what are our plans for the coming year. So in terms of I'll touch upon all the three areas. In terms of sale, the focus continues to be in terms of diversification, both in terms of channels and products, right? So in terms of channel, as I mentioned that we have already kick-started our engagements directly with schools and universities. We do expect this channel to continue to grow with us. Our one of our initial goals is to ensure that at least 25% of the sales comes through direct through schools and college as a channel. Another channel which we have started building on is the SME channel. And there's a fourth aspect on which we have started now working on is the CSR aspect of the things, where we can collaborate with NGOs and government schools to bring these hardwares for underprivileged students utilization. So in terms of sales rates, one is definitely channel diversification. Second is product diversification. This year we definitely look at diversifying into some of the product groups or the brand groups which we have not dwelled earlier. This includes MacBook and also some of the product groups like tablet, right? So the road ahead for this year is to see how do we broad base our channel. I think the theme continues to be that be direct to customer, right? So be it SME, be it universities, be it reaching out via NGOs, the idea continues to be direct to customer and be it our own website as such, right? Now talking about the road ahead in terms of operation, I think we have made good inroads in terms of building a scalable capital as well as soft infrastructure, be it our IT infrastructure or the capital in infrastructure that we have built. I think this year is going to be an year of leverage that we are able to so to speak squeeze as much juice as possible from the new capital infrastructure that we have built. I think as a company will continue to invest in R&D and building the IT infrastructure and more of hardware research and development to further improve our repairability and also continue to automate and drive efficiency in our operational processes as such, right? Purchase again continues to be a key focus area for us. We would like to further expand in terms of direct engagement with corporates and direct buying from directly from the corporates. Right, we have just to put another update on the same front. Uh, we are expecting to receive our recycling and R2 certificate within few months, and that should allow us to also expand into recycling as we deem fit. But we do not foresee ourselves to start that in this year as such, right? So with that, I would like to open the floor for questions which the group may have.
Thanks, Vishesh. We'll take the first question from Devrat. Devrat, you can go ahead.
Hi, Vishesh. So,
Hey, hi, Jason.
yeah, I would just like to say that you guys have done a phenomenal job so far. I mean, companies come a really long way if you've just incorporated yourselves in 2020. And one thing that did stand out was that the fact that you gave higher targets, right, which were not met. So now going forward, I have a couple of questions. One is on the profitability, right? Like, where do you think we can end up, or what would you say would be a fair margin, at the EBITDA level that one should assume? And when it comes to growth, I mean, are you well capitalized with the working capital? Because from whatever I understand, it's a capital intensive business, and we do have to hold inventory of computers. So, these were my main questions. If you can just address these, and then I can move to my next question.
Sure. Thanks, Devarat. Right. So I think first question was around the profitability and the margins, right? So and also in the guidance on the same. So I think two things I want to like bring to the notice of everybody, right? So first is on a unit basis. I think we should be in long term we should be able to maintain a 14 to 15% profitability as such. But as I said, right, I mean, we are currently in a growth phase, and we will continue to invest in both human and like marketing capital as such, right? So even if, for example, you look at our gross margins or the COGS margins, they actually showed a certain level of improvement, right? But definitely we invested a lot more on the human capital, and that's where we see a net margin impact as such, right? So uh, I mean, just representing the board, I think like one of the directions we'll continue to work towards is, I think there's a big untapped market that we need to address, and to do that, we at least envisage to continue to grow at a high double-digit numbers at the very least, right? So that would mean that we'll continue to invest on human and like capital infrastructure, though our unit level margins, I feel, are robust enough, right? Net margins may look subdued for coming 1 to 2 to 3 years, right? But that's because we are investing on growth as such, right? So that's on the like the unit economic basis, right? And you can see our COGS has actually improved on a year-on-year basis, right?
Mhm.
Right. So second, I think your question was on the working capital requirement. So yes, it is a capital intensive because see, we have taken a very strategic call that we want to own the asset, refurbish, and then sell it, and it has a pretty long cash cycle as such, right? So it does continue to be one of our like challenges. This was one of the reasons we came to the market, right, to be able to fund our working capital. I think yes. So given the growth that we are looking at, working capital requirements are going to be consistently there. So,
Okay, and another thing is in terms of absolute volumes, right? Could you give us some direction on that? Like, what kind of volume growth can we be achieving? And I mean, so can we look at this in terms of volume multiplied by price, or is that the incorrect way to look at it?
more or less we can, but I think like the price point will always, as we scale, there will be a negative pressure on the price point. Yes, so in terms of volumes, we did around 58K units, right? I, though we don't prefer to give a like guidance, but I think we are very hopeful with the current facility, and now doubling of the like people and ramp being there. And I just shared like the kind of the per day run rate which we are able to like achieve now, right? So I think we should be able to achieve a high double-digit growth in this year.
Okay, and anything on in April and May, like if you can, if it's okay, if you can share
So I
some
think
data on
April,
how
as I
the
said, I
past
think
couple of months.
April is when probably April and May is when we fully got functional, right? We saw May we are just closing, but in April we closed at a 7.5 CR kind of a run rate.
And that is net of GST and returns, or is that just gross?
That's net.
Oh wow, okay, that's not bad at all. So okay, I mean that's it from my side, Vishesh. Thanks so much. Yeah.
Thanks, Devrat. We'll take the next question from Jatin Jadhav. Jatin, you can go ahead, please.
Hello, am I audible?
Yes.
Yeah. Hi, Jatin.
First of all, congratulations. And I would just like to ask a couple of rudimentary questions since I'm new to this business also. So the refurbishment and the process of you repairing old laptops and providing them as a product ahead, uh, I believe it's not much of a complex task, but since you've achieved scale, hence you capture market share. Is it safe to assume that?
Uh, I would actually tend to not agree with that because I mean that's what most of like the folks before they see the facility feel. But I see. I think relatively refurbishing is pretty complex process. I mean, just to give you a sense, like on a per laptop basis, right? There's like it's like 2.5x more human capital that you need to invest, right? As compared to building a new laptop, right? That's because the amount of the repairs that are required, right? And also like the other aspect is to what level we do. For example, like we give a scratchless unit guarantee, we give the same performance guarantee. So we have our own, like paint shop, we have metal processing units, we have 3D printing. So there are like lot of things, right? So it's like just making a car as good as new and selling it with warranty, right? So in terms of process complexities, right, I think what adds complexity to the overall operations as such is the number of different SKUs that you are dealing with, the different kind of problems that each will like of the SKU may have, and the kind of the quality that you are like trying to like deliver, right? If you're saying that every car, right, I mean, if you're selling as good as new, right, then your capability to bring to that level, right? So that's where I think the complexity increases, right? So if you look at, I mean, there are like 500 folks plus like deployed by us, right? And in terms of units, we are talking about 300 to 320 units a day, right? So there's a lot of like human capital. There's like a lot of technological interventions, right? So we have 13 plus departments, right? So we have a separate department for keyboard, display, body, repairs, QCs, right? So yes, I mean, it is actually a bit of a complexity, and I think that does give a moat as a company, right? Because it's not
Exactly.
right. So yeah.
So you have a whole basket of services and you can refurbish laptops like as good as they were new.
Absolutely right. So that repairability. Yeah, sorry.
Okay. And second question on the human capital side. So availability and retention of human skilled labors would be one of the points we should consider going ahead. Like
Yes.
it's one of the crucial points.
Yes. Yeah. So I think
And
yeah, sure.
please, sir, go ahead if you
Yeah,
wanted to add
so
something.
70% of our like workforces are blue collared ones, right? So we heavily rely on ITIs and there are like other specialized hardware courses being run by government and Jet Kings, right? So, but yes, 70% of the workforce will be blue collared workforce as such.
Got it. And one final question, how easy will it be for you to venture into different electronic segment like phones, probably LCD TVs or anything like that? Because I feel
Right.
it pretty much the same.
Yes, yeah, that's the
So,
idea. Absolutely, yes, right.
so
I think in terms of operational competencies, right? As you said, like components largely remains the same. Everything has a battery, it has a display, it has electronics component at the end of the day, and some plastics and metals, right? And pretty much we have competency in each of these areas, and of course software, right? So yes, in terms of operational competencies, I think as you said, and that's how we are developing it, that we have the competency to handle different electronics as such because we have built component level competencies, right? I mean, your overall supply chain dynamics and things like that change, right? But that's how like the product mix looks like. Like we start from like laptops and which is a pretty mature, stable market, and then you further expand into tablets, mobility, and other areas as such.
Got it. Just a follow-up question. So out of all the basket of electronics we were speaking about, laptops are the most complex ones, or which are the most complex ones to refurbish and repair?
Uh, I think whatever feedback and like we have done pilots on other product lines also. I would like yes, I think it is one of the most complex product lines as such, right? So
Got
for
it, got
example,
it,
if I were to just compare with desktops and laptops, like laptops takes us 4x more effort than a desktop as such.
got it. I'll get back into the queue. Thank you so much.
We'll take the next question from Akshay. Akshay, you can go ahead.
Thank you for the opportunity. I am very much impressed by your product. So congratulations on that front. I am using your product and I must see it's very good.
Thank you so much.
My question is on marketing front. When I see your marketing, it's not as such good as your competitors. So what are we doing on the marketing front strategy?
Sure. First of all, thanks so much for the appreciation on the product, right? So good question, right? I think marketing is something which you have started in, and as I mentioned, that was one of the key objectives of the IPO also. In terms of what key steps we are taking when it comes to marketing, first and foremost, last year itself, like so Mr. Sarath Somani is my close friend from IMCAL days, right? So he was the head of online sales and marketing for Western Union. I have got him like happy to like tell that he has come on board as a CMO for us, right? So I mean that was the first step to get like someone like who will just focus on the sales and marketing because we want to build this as a brand, right? In terms of other interventions, as I mentioned, we are trying to build our own brand and driving the traffic through our own website, right? So now we are being able to drive like 25% of the traffic through our own channels, right? In terms of, but I think I would say that 23, 24, we were more focused on the performance or an ROI related marketing effort, right? Another area where we invested a bit more on the marketing is reach out to schools and colleges, right? Where we did couple of, outreach programs there. We put in some certain kiosks and held certain competitions as such, and which is paying dividends to us, right? So, but as I said, I think, see, our IPO in October is when the funding came in, right? I mean, I think the last 5, 6 months for us has been laying the foundations and building the plan and piloting on few of the things, right? So this is going to be the year we will continue to like invest in our marketing effort, both in terms of like brand building, and it will happen both online and offline, right? In terms of online, we do sufficient spend in terms of Facebook, Insta, and like search marketing as such. And in offline, we are reaching through like other channels. Having said that, I think yes, as you rightly mentioned, there's a lot more to be done, a lot more traction to be built, right? I mean, honestly, I mean, our Google ratings are pretty significant, but then again, I mean, we have got 1,400 reviews with 4.6 rating. But if you look at our Facebook following or Insta following or Twitter, right? So there's like a lot more. So these are the channels which we are like now started to build, right? So it's like a comprehensive roadmap that we have built. It's just that we are doing one thing at a time, trying a couple of channels, and then making sure that we scale that, including the website revamp, which we are thinking in this year, right? So yes, I mean to summarize, yes, I think we are not there when it comes to like where we would like our brand to be positioned, but already we have built the roadmap, and we will now continue to invest and make sure that this year we are able to build the brand and the other channels as we would like them to be built.
Some of the feedback as a consumer that your moat is your product, and in your marketing in the Instagram, you are not highlighting the quality as such. It should be highlighted.
Sure.
And another thing is that why are you decreasing your time? When I am seeing your Instagram ad, it shows more about the student that are buying a new product, new laptop. कॉलेज में कुछ किया नहीं है, मतलब अफोर्डेबिलिटी नहीं है, बट देर आर मैनी पीपल, let's the case of mine. I am a middle class student and I can afford a new laptop, but
Sure.
I got a refurbished because I like your quality.
Sure.
So why are you just focusing on that student that can't afford? Well,
Mhm.
your marketing should more focus on quality, which is your moat.
Absolutely. That's a very well, like a good feedback, right? It's like well taken. As I said, I think this was part of one of the camp, like school colleges outreach, which we are doing. We tied up with one of the influencers as such, right? But feedback well taken. I think we will continue to build different campaigns focusing on the various features. As you said, I think we also don't want the positioning to be only on the price point, right? Because our key moat is the quality. The idea, I mean, the whole philosophy of NewJaisa is to be able to deliver that high quality like product, right? So feedback well taken, will work on the same.
And another thing, why are you not adding another performance marketing? Matlab, which one you have added is not much popular. There are many more who is more popular, and this is the time of matlab, I am seeing very much ad of other refurbished brand also, which are localized, but they have very good marketing and good performance marketing.
So again, I think for us last year, the like the number of units that we were able to do, so we were owning and offing our marketing basis the amount of the units that we were able to, and we were trying to cater to our online like other e-commerce platforms first, right? And now, as I said, like we have been able to scale the new facility, we have that capacity, and we will continue to now spend on marketing, continue to like expand on those channels, because we used to on and off them basis the supply or the number of units which were available with us as such, right? But I think feedback well taken. There's a lot of work done to be done in this area, and we are like aware of the same. And I'm hopeful that hopefully by the next meeting which we have in the next 6 months, you will see some positive results.
Just a one request to have some good, well-known performance marketer on your brand. That will increase the trust. Once I use your product, I got trust on your product. But before I use, how will I get trust?
Absolutely, absolutely, absolutely. We'll do that.
Thank you, sir.
Thanks, Akshay. We'll take the next question from Pawan Kumar. Pawan, you can go ahead, please.
Hi, Vishesh. I just wanted to understand, especially on the inventory days, what are the kind of steady state inventory numbers we are looking at?
Yeah, so I think for us,
can you hear me?
Yeah, I can hear you. Can you hear me?
On the inventory days, hello.
Yeah, hi, Pan. I think I got the question. So I think in steady state, we are looking at 90 days of inventory, right? So 90 to 110, right? I mean, that's like what we feel it will end up as a steady state inventory for us, right?
And
so, but
overall working capital cycle as a whole, net working capital days, have you thought about it? Because at this level, I think it would be unsustainable for you to grow.
Agree, right? So there are, as I said, right, I mean, there are an opportunity like for us to improve both on the, because it's right now, it's like, like buy in cash, sell on credit because of the e-commerce platforms. But as I said, we have already diversified 25% of our sale as direct sale, right? So that will help us to reduce the cash cycle as such. And as I said, I think one of the other reasons it looks high is because, I mean, if you compare our inventory with the numbers that I was talking about in like April, which was around like 7.5-ish, right?
Okay.
So right, so that then it is like around 80 to 90 kind of days which I was talking about, right? Right. So because I mean it's a growing concern on an annualized basis, it will look high, right? But as you said, I think we are very much aware that for us, the cash cycle could be a potential roadblock in terms of growth, right? The key interventions there is, as I said, like do more better improvements on the AP side, better improvements on the AR side through direct sales, right? Doing like on the AP side strategic like engagements with corporate, so you get a credit over there, and continue to improve on your like working cycle, like working capital cycle or the production cycle as such, right? I think like for us the sweet spot there, as I said, looks somewhere, I mean for this year the goal we are taking is between 80 to 90 for so when I said
is this a cash cycle or inventory cycle we are talking about, 80 to 90 days?
See, 90 to 110 when I told you initially, that was a cash cycle, right?
Okay.
I thought you were asking about the cash cycle, then I realized that you were asking about the inventory. Right?
Okay, 90 to 100 days is the cash cycle and 80 to 90 days is the inventory cycle we are talking about.
Yeah, right. So that is what we are like aiming at for like this year.
Okay. And I just wanted to understand on the tax side, are we getting any kind of special benefits? Because your tax rate is somewhere around 18-17%. Should we expect the rate to be here or 25% normalized? What is it?
I think it should be here. There are certain benefits because of the
No.
some part of the inventory is scrap, right? So the value like that is done at a 5%, right? So valuation as such. So I think that the blended is around that. This should continue for this industry as such.
As of now.
Yes.
Okay. And one other question I had was regarding the employee cost. So
Mhm.
currently we are doing, if I'm right, 20,000, which looks like a normalized rate for whatever we are hiring right now.
Mhm.
But going forward, what is the kind of inflation in terms of per employee cost that we should be taking going forward? And what is the number of employee addition for the next year that we expect?
So for the current started financial year, in terms of employee addition, definitely we are looking at like 20 to 30% or around that number, 30% employee increment, right? In
Okay.
terms of inflation, yes, we do expect like 4 to 5% kind of inflation on that. I think as we continue to grow because of, because the new employees are at a lower price point, right? I think we should be able to balance it out. But having said that, I think I do expect a 4 to 5% inflation in terms of salary.
Okay. And if you can permit me one last question. So is it like, is it a reasonable assumption if I say we would balance our growth based on whatever is our employee hiring and the working capital cycle, capital that is available from the working capital cycle that is
Okay,
there in the system right now? Is that
right.
the right thing we use?
Uh, yeah.
Yeah.
So so I mean, yeah, it's a like. I think our first preference, is for the coming 4 to 5 years, right? If there's a growth opportunity, right, we would like, and if it is like has to be funded, right, we would like it to be continue to fund on the growth opportunity as such, right? And hopefully, like in next like 3 to 4 years, like after 4 to 5 years, like balance it out when we see that we have become a reasonable scale, right? So
Hmm.
I indirectly answer your question, but I think you got the point, right?
Okay.
So
Okay. Fine. I'll join back in the queue. Thank you, Vishnu.
sure.
We'll take the next question from Deepak Chokhani. Deepak, you can go ahead, please.
Hi, am I audible?
Yeah,
Yes,
I did.
yes.
Yes.
Hi, Vishesh. Thanks for this opportunity. So you just mentioned that we'll try to grow in high double digit. So what is that? 20s or 30s or like what kind of double digits are we talking?
Deepak, I mean, as you will be aware, for the last 4 years, we have been like able to consistently deliver at least like an average CAGR like of 50%, right?
Yep.
So that's like the kind of the numbers I think we are very, very confident even this year, right? So at a bare minimum basis, right? So
Wonderful.
I
Okay,
think that's right. Yeah, that's
that's great. And the 14-15 margin you mentioned earlier when someone asked, is that the EBITDA margin or the PAT margins you were talking about?
So this year, yes, the EBITDA is 14-15%, right? But on a
Yeah.
unit economics, and that was also because of the like increased employee cost, right?
Right. I'm talking of the next year. What's your kind of
Yeah, guess
target
right.
types?
So again, I think see as I said, I mean we are looking at things from two perspectives. One is on the unit economics basis, and the other is what is the growth investment that we continue to do, right? So definitely, I think even for the coming 2-3 years, I do see that there will be on a net margin or PAT margins, there will be certain pressure, right? On a unit economic basis, we still believe that we will continue to deliver at a 14 to 15% of PAT, right? But overall, PAT will be lower because I think, as I said, right, I mean, the first priority is to continue to be the growth momentum which we have in the market. And remember, like we have a 3 to 4 months of, like RAM cycle. So you have to invest on the human capital. We were just talking about marketing and how we can do better in terms of brand building and stuff like that, right? So those investments will continue, which will have a slightly lower, which will have an impact on the PAT as such, right? So,
So
right.
got
So,
it.
but I think we would prefer to, at least because there is a market opportunity and we are just too small right now, right? So I think it will be good to continue to grow at a healthy clip, even if it means at a slightly lower margin as such.
So pretty much like FY23 and 24, of course, the top line grew 40-50%, but the PAT was broadly the same. So similar type of kind of specs are you looking at?
Yeah, maybe a percentage here or there improvement as such, right? 1 to 2%. In terms of profitability, PAT.
Right. So how does this change after 2-3 years? Let's say you keep growing 50% top line. Where do the investors or the market see the PAT? Like when does that change happen?
So our plan is up to 3 to 4 years, right? We want to continue at this, right? As I said, on a unit economic basis, we are still at a 14 to 15% PAT, right? So that's the steady state PAT, which we strongly believe once we have raised, which we should be able to deliver after 2 years of investment.
Got it. And just on the same growth part, like this year H2 versus last year H2, we grew only 10%. Although you did mention in the press release during Diwali that this Diwali was your best. I mean, and the growth was actually, if you compare with H2 last year versus this year, it's only 10%. So how does it stack up? I mean,
Agree, right? Yeah. So I think yes. I mean, for us, October was pretty good, and so to one of the other, not the challenges, but because we shifted the place, I think we had almost a 15-20 days of loss because of like all the shifting, getting the things stabilized as such, and that's one of the reasons, like we were not able to get the kind of the results that we were expecting in the last 6 months. So as you rightly mentioned, if you look at a cumulative basis, right, it does not look like a big jump. I mean, Diwali was great. I think like the first 3 days, each day we did 1 CR plus kind of a numbers, right? So, but because we were in a phase of like shifting from like the old play, like infrastructure to the new infrastructure and the ramp, right? So those things definitely took a while, right? And but definitely, I think we are already seeing very positive shoots of those investments that we have made, right from April, May as such. But yes, I mean, we did, I won't say lost the momentum, but yes, weren't able to grow at the clip that we would have loved to, right? Because of this shift. As such.
So, okay. So that's okay. So, Vishesh, are we also looking at some kind of equity capital raise given the pressure on the working capital and the aim to continue growing at the 40-50% rate?
So, Deepak, I think I might not be in a position to comment on it right now, right?
Right.
Okay.
Fair enough. Just last couple of questions. Quick. Broadly, I mean, I'll echo the same views as some of the other speakers have said that we are very good on the quality and the production and ramp up, ERP, everything. But what we lack generally, which is my personal comment, is just the marketing part, and more so if you're looking at increasing the direct sale part. I mean, these days you have 450 employees. I mean, just take 5 employees and make them tweet or Facebook or Insta. I mean, Twitter's also, I mean, of late I've started seeing them, but those are not proper. I mean, you click on it, it doesn't go to your website, it doesn't go to that particular product which I want to buy. I mean, 450 employees you have, you just have to spare 3-4 employees, 5 employees just to increase your direct sales, which is what all are aiming for, right?
Sure. No, it's a very valid point, Deepak, right? So as I said, like we have just started working on it, right? So this feedback well taken. I mean, same as you mentioned was echoed by another investor, right? So Mr. Akshay, right? So
I mean, production is good, but it has to be complemented by, you know what I mean.
Absolutely, right.
And my last point, sorry, I'm taking a little bit more time. Again, I mean, I reiterate on the communication part with the investors. I mean, something which we have to improve big time. I mean, we can't wait for 6 months to get such updates. There are no presentations. Even after results, the call is after 4-5 days. There are no presentations. There's no press release. 6 months is too big a gap for investors to know as to what's happening in the company. I mean, you get any contracts, do anything major, please inform us.
Sure, Deepak, we'll improve on same. So we're like just started working with another partner on the same, and hopefully we should see a lot of improvement in that area also.
Perfect, Vishesh. Thanks. All the best.
Thank you.
Thanks, Deepak. We'll take the next question from Anupama. Anupama, you can go ahead, please.
Yeah, hi Vishesh. So I had two questions. One was on the other current assets. You have reported around 10 crores. I just wanted to know where is it, like what is it, or
The current advances are there. Yeah. Okay. APAR is under that, right?
No.
So there are advances to, so the purchase advances are under that, right?
And assets with their taxes.
You
GST.
can, Ashish can take, he's on the call. He's our CFO. You can, or you can answer from here.
Yeah.
To the supplier.
Yeah, so these are advances for purchases. I think I'll give you the exact numbers also.
It's 10.32 CR. It has prepaid expenses,
Prepaid expenses of around
11 lakh,
okay.
27 lakh rupees. Other
Yeah.
receivables are 11.51 lakh. And advances to supplier, which basically
is
was
around 7.
Yeah.
So large part of it is advances to suppliers, right? So they are like two key suppliers, and I think the delivery, if I'm not wrong, came in this financial year.
Yeah, and 2.75 CR constitutes the GST ITC, which we have.
So that's there.
Yeah.
Right. So yeah, 2.57 is a GST. Like input credit.
Vishesh, so this is Pawan here. I just wanted to understand if that is advanced to suppliers. Right now, see, I'm trying to understand the current outstanding inventory plus advanced to suppliers numbers, because this is one form of working capital only, right?
Right.
At the
Yeah.
end of the day, this is not cash.
This is yeah. These were advances because see, we have a like with a couple of suppliers, we have an ongoing, they like supply keeps coming in, right? So these
Okay.
are like, so there are 2 or 3 where the advances were part because the supply keeps coming. And sometimes what happens is if there's a large lot, because in our like business, sometimes like you are getting like 3,000 assets, 4,000 assets in one go, right? And sometimes the deals are in much higher numbers, right? Because so you need that kind of a capacity as such
Okay.
to do that. Yeah.
Okay. Is it in the past you have communicated that the demand is not an issue in this industry? Do you stand by the same statement even now, or
Yeah.
what is the limitation in the system? Is it the demand or is it the working capital management? How do you look at
I think working capital management, as you rightly said, I think we have to be much more lean, nimble, right? And demand is definitely there, but I think as has been like highlighted, right? I mean, let's put it other way. I think like a couple of folks have already highlighted that we need to do a lot better on marketing and sales, right? Because and one of the reasons we haven't been good is because we never, like because the demand for us inherently was like there as such, right? So I think stand by that, right? So I think, see, we are at a 58K units right now, right? So in India, 1.4 CR, right? So we have hardly made a dent. I assume that once we reach a like 5 to 6 lakh units, right? That's at 1,000 CR of top line, right? Maybe at that time we have to get a bit more innovative in terms of demand. But till then, I think it's more of a supply and operation challenge for us.
Okay. Okay.
Sorry,
yeah,
I think.
just and one more question. Can you used to give the segment split, laptop, desktops, accessories? If you have that, could we have that also?
Yeah, so I think laptop is around 55. I mean, I could be here or there by around 2-3% as such, right? And a desktop would be, yeah, desktop is pretty much large remaining, like 45. Accessories, actually, we just bundle it up with desktops, right? But just a second. So, yeah, in terms of absolute number, accessories is around 3,000. In terms of value, I would say there would be around 4 to 5%. So, it's almost like an equivalent split between desktops and laptop. Laptops have a bias, right? But it's not much, like 55 to 45 right now. So, we continue to see a reasonable demand when it comes to desktops also.
Okay, yeah, thank you.
So we'll take the next question from Bhimani Capital.
Yeah, hi. Thank you. Am I audible?
Yes, you are. Hi.
Yeah. First of all, thank you, Vishesh, and congratulations for the numbers and giving me the opportunity. Thank you very much. Before I ask my question, I'll just echo what Deepak has said. Like, I was personally looking forward to this call so that I can get update. So it will be very good if we can get more frequent updates about what's happening into the business.
Sure.
Now, coming to question, I wanted to understand about our customer profile, like who are our customers, where they are based at. Is it mostly on the metro, or do we have a diverse supplier customer base? That's question one, if you can answer.
Right. So I think our customer segmentation is almost like like equally split into three key ones, right? So almost 30% is through SMEs, right? 30% are like the students kind of a profile, and another 33% are like for the home users as such, right? In terms of like geographical like split and tier wise, I think middle and lower middle is the sweet spot, right? So we have served more than 19,000 like pin codes as such, right? But having said that, it could be because of the e-commerce partner which we have, right? So still around 45 to 48% of the sales comes through tier one cities, right? And the remaining, or it's almost equivalent, right? So 50% is from tier one cities and remaining 50% from tier two, tier three cities, right? So we see a pretty diversified, but the large customer segment that we are seeing is either, like this students categories, the SMEs love this product, right? And the third is for the home use as such, right? And definitely we have been able to cater to tier two, tier three, but I think, yes, there have been a large bias towards tier one, but I think that's not more from the demand generation perspective, but rather from the reach perspective, the kind of, the channels that we have opted for as of today, right? I think the ASP will give you a reasonable idea, right? So our ASP hovers around 15K, right? So that's like the 14 to 15K is the ASP, right? So
Sure, thank you. And my second question is, and this is a broad question, do you see any government regulations or policies changing that will support or hamper your business?
long term, I think long term, yes, right? I mean, EPR is, it's like already governments are making changes. So like, see, progressively, I think that's the long term, like across the globe, like the policies will become much more, much more adherence will be required with respect to e-waste, right? So what would that mean is that a lot more people will responsibly dispose their e-waste assets or electronic assets, right? So that in general is going to be beneficial, right? So if you look at the last 2 to 3 years landscape, right? Recycling was accepted as a, like a e-waste reduction mechanism, but not refurbishing. But now government acknowledges refurbishing equally like important as recycling, right? And it's like so I think the policies in long term, right, will continue to support, because like I think that's like there's no other way, right? So there's a EPR, digitization of EPR, where the OEMs will not be allowed to sell, right, till they show certificate for responsible disposal of their old assets per se, right? And the more and more the digitalization of these things and the adherence and the requirements happen, the push will continue towards refurbishing, recycling, reusability, and sustainability as such, right? So, but if your question is mid to short term, I think it's very like I am not really sure, right? I mean, these policies are already being implemented, right? I think, and every year we see more traction coming in as such, right?
Sure. And my last question before I hand over to others. I know we talk about the working capital, the inventory that we are having. In this case, do we have any, because we are buying on advance, do we have any alternate supply strategy where we can use the channel finance to reduce our cash outgo?
Yeah, I think as we continue to build more meaningful, like long-term strategic tie-ups or partnerships with corporates, right, for the asset disposition, right? So I think that's where we can like hope for, getting better credit terms, right? In terms of channel financing, I think we have discussed, but we haven't been like closed on anything as such.
Sure. Thank you, Vishesh. That
Thank
would
you.
be all.
Before we go to the next participant, I'll take a question from the chat member. Mr. P.N. Krishnan, you can unmute and ask your question.
Hello,
Mr.
am I audible?
Yes.
Yes.
Thanks, Vishesh and the team for the con call. I just want to introduce. I'm a user of NewJaisa product, and I wish to say it's really excellent, and you have delivered much more than what was initially promised in terms of the battery life, the looks, and everything. And not only me, on the basis of my word, my friends also have bought it. So all of them are really happy with the product. Coming to my questions, there are a few questions that I wish to ask for. One is, since you say that supply is a challenge compared to the demand, and even when one goes on to your site, a preferred product is generally sold out. That's what it says, and why you want to keep something which is sold out, so that immediately the aversion starts in terms of, oh, I would have loved to buy this, but then this is not available. Maybe I'll try to look at some other channels for buying this. So there has got to be a sort of a, I wouldn't know how to put it, but if multiple product with a good inventory in that product line, which should be available for people to pick and choose as to which one they would like to go in terms of the purchase. And whatever is sold out, why keep it on the website at all?
The feedback well taken, sir. As I said, like I think last 6 months also, because we were trying to work on like the production capacity, and as you rightly said that sometimes it becomes a challenge for us to choose the channel, right? So because the things do move fast, right? And thanks to a lot of word of mouth, like from like you also. But having said that, I think yes, I mean your feedback is like we'll tweak that. I think sometimes what happens is like many of these things are automated, right? So if they go like out of inventory, it shows sold out. But I'll definitely share the feedback with the marketing and sales team as such and see what we can do. But yes, now that we have like built like like capacity, I'm very hopeful that we will be able to continue to give much like more choices, at least for a longer duration, to our customers, right? So but in terms of removing those, like I think I'll share the feedback with the marketing team and see we work on that for sure.
The second thing is in terms of your supply constraint, like how is the pipeline? How are you planning to maintain the pipeline on a continuous basis? When I say this, you cannot have a situation that when the product is available, then you sell, and then suddenly the product is not available.
Yeah. So I think I think that's a very good point. I think, but this is one challenge. Like yes, you can minimize it, but you can never mitigate it. That's like the continuous supply of a particular model per se. Because remember, like we are in a refurbishing industry, and at the end of the day, like we can refurbish what is available as such, right? But what do we do to mitigate such things is, for example, right now our focus is only on a B2B2C. So like because we take from corporates, the number of models are well defined, and the quantities are reasonably available as such, because they are sold in large quantities, right? So that's one of our mitigation plan to build certain continuity. But as you rightly mentioned, I think this has been one of our challenges, because like the model becomes hot, but of course like after sometimes it becomes like too hot and it's not available in the market as such, right? So mitigation plans continues that you focus on commercial models so that the variants are less but availability is high. That's one. Second, of course, is there's always an equivalent, which you were also like pointing at, right? Alluding at that. There are always an equivalent available that we have to, right? But inherently, this is not a new product that we are building, and we can continue to build like if like customer are like loving a particular product as such, but we can always offer the similar features, right? So this is, I would say, this is like a baked in limitation of the business model as such, which can be mitigated but not done away with. Right? So,
Next question is in terms of the market. If you look at the overall refurbished market,
yeah,
where would you position in terms of the rank?
sure. I think so. Two things, right? I think still our estimate says that still 70 to 80% of this is like or more is still unorganized, and I'm just talking about the refurbished PC category as such, right? So the overall organized sector in itself is not contributing more than 10 to 15%, right? I think so. We are the second largest when it comes to volumes in India in PC category.
Among the organized players.
Yes, yes.
Okay. Now, is there something that you can plan in terms of additional products like cameras or something like that, which, you have a production capacity available, and very much many of the features like a paint shop or so many other things are something that can easily be used into some of those products as well.
Sure.
I don't know. This is just a
No, sure. So I think that's as part of the product roadmap, as you're saying, right? So we definitely want to first in PC category, for example, we are not dealing in MacBooks, right? We want to initiate that, then get into tablets and other areas, including mobility, which is telephone, right? And then, as you rightly mentioned, and look at the other electronics which are aligned with our competency, right? So, sir, we'll just take another
one last question.
Yeah, sure.
One last question, if I'm permitted. Now, when do you think is from the present facility which you have, you will touch the peak capacity utilization? And when can we see a stabilization of your PAT and at what capacity utilization can we see PAT and EBITDA improvement?
So as I mentioned, at least for the coming 2 years, we want to continue to invest in growth, right? In terms of current capacity or current place which we have, utilization peak, right? As I said, at the current place, we can further increase our per day unit production by at least 60 to 70% by going into a 24/7 model, right? But as you rightly mentioned, in terms of PAT stabilization, right? I mean, I would like to be like upfront with the investors, right? I mean, we would like everyone to continue to be on the growth phase, right? At least for the coming 2 to 3 years, and then we will look at the stabilization of the profitability side.
And how do we reach in terms of seeing your facility or meeting up?
So maybe post call, I'll just talk with our IR and see how we can take it forward.
Okay.
Thank you, sir. Thank you so much.
And we'll take the next question from Amit Mishra. Amit, you can go ahead.
Hello, Vishesh. Can you hear me?
Yeah, hi, Amit. Hi.
Hi, Vishesh. Thanks for the opportunity. Most of the questions are answered already. Just going back to your comment about now we are 450 plus, and we are doing 300 to 350 assets on a single day basis. What would be it like if we push it to 24/7? I couldn't catch the number. I think you mentioned it when you do 24/7.
Yeah, so I think, I mean, the theoretical maximum capacity utilization of the current facility, we can increase it to another 60 to 70%, right?
Another 60 to 70%. Right?
That's a theoretical number, right?
Theoretical number. Do you have any plans to do it in near future or?
Yes, I mean, we would like to make most of it in the coming year, right? Depending on how we are able to scale, right? So, but our current unit is already very healthy, right, in terms of this. But I mean, definitely, like the plan is to utilize most of that, like whatever we can in the coming year.
Right. So, at what capacity you are at right now? The capacity is 300 to 350, and what capacity we are at right now?
No. So we are doing 300 to 325 right now.
Okay, this is okay, and this is the maximum capacity you can have it for this size.
Yeah, so I mean, from here we can further do 50 to 60% improvement, right?
Only by increasing the night shift, let's say 24
Right, yeah,
by
night
7.
shift, Sunday, right? We are doing
Sunday.
one shift, right? So 50
Right,
to
right.
60%, so that we don't have to like build a new infrastructure as such, right? So
Agree.
yeah, so right now we have a 300 to 325 kind of a run rate, right? We can increase
Yeah.
it further by 50 to 60% in this year, right? By
Understood. So on the ERP also, is it not taking too long because
So almost like I think
there,
yeah, so like 2 phases we have already implemented, right?
right?
It's like the new like one more like automated QC which you have to push, and hopefully we are pushing that into like 2 weeks, right? So already like the inventory, like AR, AP, and the inventory serialization management, and like those kind of like things we have already pushed in terms of manufacturing manageability, BOMs
And
and stuff.
3 and
But
4 is more related to sales, market, or customers.
yeah, so now the new one is from with respect to more of automations that should help us in like like improving the efficiency and also the accuracy of our QCs as such, and then we can extend some of those functionalities to our suppliers also. Right? So yes, I mean we are doing it in phased manner. The manufacturing part has been done. This is more of a QC automations that we need to push now.
Okay, and so going back to the again, production. Basically, we will see for this 1 year, we probably will gradually grow in this 50-60 part. Yeah, increased production. Right.
Yes, yes,
So this
yes.
April run rate, which you gave around 7.5 CR, it's going to show some growth on this this number during this year. Yeah.
Yes, I think that's
But
like, yeah.
but main area of growth would be from this additional shifts or holidays and night shifts. You are not thinking of expanding the existing plant within this year.
I mean, one of the plans is definitely like maybe 6 year hence, because I mean, we don't want to max out this and then start thinking, because it takes 5 to 6 months to stabilize, right? So our plan is the next like maybe like by the next H1 when we discuss, right? We should have already actively looking for the new capacity expansion, because by that time we would have consumed this 50% of the 50-60% increment that we are talking about.
Makes sense. Yeah, makes sense.
That's the plan. So, but yes, I mean, so my point of like bringing that out was that currently the place that infrastructure that we have is not a constraint for our projections for this year, which are in high double digits as such. Right?
Understood. Yeah.
But we will maybe in the later H2 we will already start investing for the next growth phase.
Right, and the common theme for the con call, I would also emphasize, just to make this point. We are in listed space now. We have to communicate to the investors. It's one of our weaker point, because and so I can't underline this more strongly. Means that this is very, very important for investors to understand what's going on.
I think feedback well taken. I think it has come from various like forums, right? So I think we'll try our best to make sure that we come back to the market with regular updates, put it in NSC, right? So that they are available for consumption.
Yeah, and also on marketing front now, basically we have the structure with under Sharath, and hopefully we will see improvement soon on this front also.
Absolutely.
Yeah.
So
okay, that's it.
Absolutely, we'll work on that. Thank you so much for the feedback.
Thanks, Vishesh and team.
Thank you.
Thank you.
Since we are running short of time, I'll request everybody to quickly just keep it down to 2 questions each. We'll take the next question from Anupama Pillai.
I think Janvi has been waiting for some time.
Yeah, Vishesh, just one more question, sorry. Could you share with us the current inventory levels? Like what is the number like for April and May?
I think
have you taken up anything new?
25, 26, around that number only, right? So yeah, I mean it's a churn, right?
Okay.
So yeah, so it's a churn around, I think similar number, maybe
similar number.
Yeah, around 50-60 lakhs here or there, right? Like, but not a major like change as such, right?
Maybe.
Which one?
Maybe.
May we have to, right? Okay. Right. So May we have to close. April, I think, was around that number.
Around that. And any other advance to suppliers? Same question.
No.
No.
I think that those also. So I think that lot is like that will continue to come, right? So there are two suppliers who will continue to sometimes in this, like what happens, you bid, right? Sometimes you have to wait for the SEO clearance and all those clearances, SCZ clearances for the material to come, right? So it does take some time.
Right. Can you explain more on that? Like, what is this clearance?
So see, these assets comes from corporates, right? So sometimes like the whole process, right? Because there's a SCZ clearance, there are other clearances that are required, right?
Right.
They
Okay.
also add to the some amount of delay, and then there are certain it's like a though you have done the deal, but every month there will be certain liquidations that will be happening and coming to you, right? Basis like whatever, because they have to do their own data wipes and stuff like that, right? So it does take some time.
Right. Okay. 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 Thank you.
Thanks, Anupama. We'll take the next question from Janmay Gandhi.
Yeah, hi, sir.
Janmay Gandhi.
Yeah, I can hear. Sir, I just wanted to understand the dead stock. Do we have any dead stocks of inventories or which is not being sold, and how much would that be?
Right, it's a good question, right? So yeah, I think debt stock, as I mentioned, right? So in our case, most of the time we are able to liquidate, right? I think like greater than 6 months old inventory, hardly will have maybe 0.5%, right? So as such, there's no debt stock, right? One of the reasons our inventory also looks higher is because we hold to quite a bit of spares, right? So our spare contribution right now is running around 25%, which includes your processor, RAM, and hard disk, right? So we keep right. So whatever inventory we see, there's a decent amount of these spares that we hold with us, right? So the debt stock would be around 0.5% as such, right? Because at the right price point, I think liquidation usually is not a big challenge. In terms of what we buy to what gets scrapped is around 1%, right? So again, I mean that we bake into our costing whenever we do.
Okay. And sir, two or three fast one single question. Sir,
Yeah.
have you considered procuring the computers and things from out of country? And would that help us? For one question. Second question is, sir, as you are expecting 60%, 50 to 60% growth, you'll be exhausting the capacity. And what is the next capacity that you will be planning to achieve for how many years? And so what is the infrastructure planning? And the third thing is just a request for monthly updates on the volumes that you can give us.
Okay.
From
Volumes,
going
I'm not
forward.
sure, but definitely, at least I think, I mean, it has come from many investors, right? We'll definitely try to make sure that at least on a monthly basis we are able to share updates with the market as such, right? So definitely, I think quickly coming to your question, one is imports or from procurement from outside India. Right now, as we some of you are aware, these are limited by the government rules regulations. Definitely, we'll be looking or discussing with government. We already see a pilot is happening. We have also made certain progress because I cannot talk on that right now because of it hasn't been it's still under discussion, right? So, but yes, I think there are certain government regulations. But there are positive movements in that sense. I think I think in the medium to long term, this will work out for the benefit of our country also, right? So that's your question with respect to this. In terms of capacity build up, as I mentioned, I think in H2 is when we are envisaging for the next, starting to look at the next capacity build up. Next capacity build up, we will probably try to make again see our last capacity to this capacity, we built double the capacity. So next capacity build up also again, we'll look for double the capacity build up, right? Because I think we can continue to incrementally add more, capacity in a near about place. This capacity which we have, I think, is good enough for us to support for a year with a very healthy growth rate as such. So in 6 months, we should start looking at it. Hopefully, for a 90K kind of a space, we haven't really boiled down to where and how, but that's what like the plan is in terms of capacity expansion as such. In terms of, like from identification to go live, it's like kind of a 6 months kind of a duration for a new like facility as such.
Okay, sir, and what about the finance of that? You'll need working capital and the what all is requirement? What is the financial requirement, and how do you think that you will be able to achieve that? Internal accruals, loans, or fundraising?
I think we are keeping all our options open, right? As I said, like there's a OD line also, right? We are discussing with this, but definitely we are keeping it all the options open. As I said, I mean, I think the idea is that we don't want to sacrifice on growth just because the internal accruals are not there, right? So I think for the coming 2 to 3 years, we will ensure that we are able to cater to the growth requirements, right? Looking at all the options, including loans, internal accruals, and fundraise as such.
So, what will be the requirement of funds for next growth?
I have to we'll work out on the numbers, right, and come back on the same.
Thank you very much, sir. Congratulations for the good achievement.
Thank you, sir.
Thanks. We'll take a follow-up question from Akshay. Akshay, can go ahead, please.
Sir, how much percentage of our purchase come from directly from corporates, and what is the goal for current year on the same?
Yeah, so direct purchase is hovering around 20-25%. To be honest, this is one area. I mean, I wanted to do better, right, last year, but we were not able. We are still closing on that key position as such, right? And and the other comes from the recyclers, right, who in turn are buying from the corporates, right? So there are two reasons. I think, unfortunately, because of certain government change, right? So our license, which we were expecting to be with us, got delayed, but it is coming in a month, right? And so this year the target is to take that number to 40 to 45% of direct purchases from corporates as such.
And are we facing supply side constraint in terms of unit, or there is a supply?
No, there is sufficient, right? I mean, I don't think we have ever, reached a stage. For example, right now also, right? I mean, if we need let's say 20K units to be brought in, we can, right? So there is supply. Is there a competition? Of course, there's a competition, right? But it's not like there's I mean, so I think there is sufficient supply as such, right? It's a matter of execution and making sure that we are able to run a well-oiled supply chain so that we have that relationship with the corporates. We know what is their liquidation on a month-on-month basis, right? We have fine-tuned our operations with that. We really understand customer requirements per se, right? So right now, because see, macro level 1.4 crore assets, right? IT assets get sold in India every year, right? So typically, even if you assume that 50% of them will come out, right? That's a huge number. We are talking about 50 to 60 lakh number of assets every year. And last year, we only did 60,000 assets, right? So I think the assets will be there. There is sufficient competition, but I think they will be available as such.
Okay. And sir, I am
Akshay, we need to keep this short. We have to end the call.
Just one question. I am seeing your reviews, and some of the reviews who purchase the goods from Amazon are not very good. So, is there any problem with Amazon? I saw your bad reviews, and majority of them are buying from Amazon.
So you're talking about reviews on the product or on the seller? Because see, Amazon, the product could have been sold by others also, right? So it becomes very challenging to control the who has sold that product. So, but if you're looking at the supplier reviews, I think we have a 99% kind of feedback on the supplier side. But the same product, for example, could be sold by someone else also. So I think I'm not really sure where you are looking at that.
I am talking about your Google reviews. 1400 Google reviews, and I am just checking recent reviews, and then many of the reviews which are not good are people who bought the goods from Amazon, and they are not happy with service.
I think one of the challenges has been, I mean, is because the customer service is provided, and sometimes there are unfortunately delays from the Amazon side, right? So and then they later realize that who's the seller and things like that, right? But so yes, I mean those are the challenges, but I think given their scale, we are very actively working with them to see how we can further improve on those customer service aspects, right? So some of the comments you might see in the sense like person never came, never turned up and stuff like that, right? So those are service related issues, right? Which we are trying to work through. But like because some of those sales were through Amazon, those are managed by Amazon, right? So, sure. I think we'll
Thank you,
take
sir.
it. Sure.
Thanks, Akshay. Vishesh, do we take one last question or do we have to end it here?
Sure. Yeah.
We take the last question from Jatin. Jatin, you can go ahead, please.
Thank you so much. I'll not take much time. Just two questions. When are we planning to go sell our products in the international market, for example, America, because we'll get a higher realization? And the second question is, can we become like a contract manufacturer like Dixon?
Okay, sure. So I think the answer to the first question is as per the roadmap, 2 years, right? That's the roadmap we are looking at for going international. And the answer to your like next question is we prefer to own the product. I think in our like current 4 to 5 years roadmap, we don't, as of now, we don't envisage to become a service oriented company because of the margin challenges. We would prefer to be a brand and a customer focused brand as such.
Got it. That's pretty much it. Thank you so much.
Thank you. All right.
Thank you.
Thank you so much, everybody.
So thank you everyone for joining on this call, and thank you to the management for giving us their time. Vishesh, would you like to give any closing comments before we end this call?
So thanks everyone. I mean, thanks for taking our time. I know it's been like a busy day for everybody, right? So again, I mean, I want to like personally thank each and every one of our investors for showing their faith in us. We know we are a SME, and my only closing comment is a very dynamic area, and we are seeing some strong traction, and we would love to continue to be on the growth phase and look forward for all of you to be associated in this journey as such. Thank you so much.
Thanks, Vishesh. And that brings us to the end of today's conference call. You may all disconnect now. Thank you.